sharing the 10th of November. Okay, the events that I want to talk about. Today, I'd like to talk about a look at the FOMC members' view on the rate hike. Now, for the entire week, we had a few FOMC members coming up and talking about, various economic views that they have. But I think one of the most important things that we should know is what are their views on the possible rate hike. So if that's clear, then we can plan out what to do next, right? So let's have a look into what they have mentioned. Now their insight over here, it's very, very, looking into them, I want to see there are any changes to the dot plot, because in December we're going to have this dot plot review, right? So this is one good way we look into this thing. So the first person who decided to, was part of the schedule over there was Lisa Cook. Now, Cook made no monetary policy remarks, but noted that the rise in Treasury yields over the past few months likely isn't due to an increase in near-term Fed policy rate expectations. It's other things. It's just that people or the lenders, right, they demand for a higher premium, and that's about it already. So it's not isn't likely due to because the Fed want to increase the rates. So that's one from Lisa Cook's view. I said this is just investors demanding for something extra protection, but she however is monitoring the weaknesses at non-bank financial institutions, as meaning the money markets and the hedge funds. So money markets here is like the mutual fund, like the personal individual trading accounts and all these kind of things. They want to monitor any issues with that part or not. So because as central bank cool down the economy and lead to tighter financial conditions, they want to see how bad that impact is before she wants to decide anything else. But when it came to Neel Kashkari, he said the Fed is making progress, not us, is making progress on inflation on the background of strong jobs market, but acknowledges that there is more to do and is not declaring a premature win over inflation. Okay, so far he is making progress. He's happy, but there's still more to do. Now, for what this more to do can be many things. It can be leaving the interest rates higher for a foreseeable period. It doesn't say anything that has to do with, said, I'm going to increase rates, okay? But there is this possibility of that happening from Neel Kashkari, okay? I can't deny that. But so far, from here, is it making progress? That means they're happy. Okay, making progress is happy. This is a word that usually shows they're happy. Now, Austan Goolsbee, he shares Kashkari's perspective. He said the fastest drop in the inflation rate in any year was 1982. And we'll see what happens over the next couple of months. We might equal the fastest dropping inflation in the last century. So we are making progress on the inflation rate. So this guy, Goolsbee, I think the way he puts it, I think it's okay. It's fine. He's happy with whatever that is being done so far. But whereas when it comes to Christopher Waller, he was very straightforward. If rates hike cause instability, Fed has other tools. So don't need to look at this one. Okay. So I like it when they are very straightforward rather than this, they don't want to say yes, they don't want to say no. So this guy is most straightforward, is rate hikes. We don't want rate hikes, there are other things we can do. Okay, as simple as that. Now, lastly, we have Lori Logan, and she thinks the labor market is cooling, but acknowledges recent inflation reading is high. Okay. Now, this one cools down inflation, right? Because the labor market, if it's not strong, it won't contribute that much to inflation. But she also recognized that there is an increase in inflation recent. Okay, we have seen the CPE and those data coming up. So would that lead to her changing her position? That could be, but it's not high. But anyway, other members did not comment on interest rate policies, those that came up, only this few. Yet the indications from those who have spoken suggest a rate hike is unlikely at the FOMC meeting scheduled for December 13. Okay, I looked at the whole thing. I don't think there will be one. And even if you look at the this particular target rate probabilities, right? So it's also showing a 90.4% chance that we will not see a rate hike come December. Okay, so you're not going to see one in December. So should the voting members maintain this tone in the upcoming months, the attention may shift towards anticipated rate cuts in the second quarter of 2024 instead. So just like all reports are probably pointing to, is it maybe the Fed has hiked these rates, this already hiked this rates one last time already, and they are not doing any more hiking for the time being. Recent languages has also said that, but the most important thing I think is after the FOMC in December, we want to look at the dot plot. As previous dot plot is showing that there is a possibility of a rate hike by this year, but now it seems that everyone is changing their tone, right? The voting members are changing the tone, so there's this possible change there. We'll wait and see. But they might just delay this rate hike thing into probably into the first quarter of 2024 instead. We don't know, but we need to see. The market right now is like celebrating and say, yay, no more rate hikes, and it's going up, right? We're seeing that. But is that going to last? You all know the answer already, right? So yeah. Next week, right, I'll share with you one thing that I've been researching lately, and I'm trying to get more data and look into it in detail, because right now market is celebrating with this no rate hike thing, and what does that lead to? Okay, that is something that I think is important, and it has to do with the US consumers or their health. Okay, so come Monday, I will share with you guys on that stuff again. Okay, so that's the end of the report for today, fundamental report.